Welcome back here with We Mean Business. My colleague Ritu Jindal also now joins me in that rather important discussion of the kind of stress that we're seeing in the banking sector, especially due to loan defaults as well as the corporate debt restructuring that we seem to be seeing. Let me go across first to Mr. Ashvin Parekh to also understand how grave is the stress level really. What is the situation right now? Many believe that actually the banking sector may be in denial mode.
That I would quickly like to make, and then perhaps that could assist your discussion. One is of course the environment that has really suddenly grown upon us in the last 3 quarters. I mean, we've seen on one side, let's say interest rate hikes on one side. We saw 2 quarters ago RBI signaling some kind of a change, but the banking system has not passed on that change to the borrowers as yet on one side. B, on the other side, on account of various factors. One of them could be the policy areas, whether that's infrastructure, coal, aviation, on account of one factor or the other. The end game, I mean, the end result is that the banking system has to pay for that, So concerns from all the sections. The borrowers are worried about the interest rate. People aren't talking too much about growth these days, of expansion and all on one side. B, on the other side, we find that there are lots of pressures arising out of, policy decisions of the banking system. All said and done, it really puts a lot of pressure on the banking system at this point in time. Now, should telecom, for example, and should 2G, for example, once again be reopened, then we will get into another huge, let's say, cost that the banking system will have to end up paying. So policy areas is one. Second is per se the quality of credit perhaps may have deteriorated also on account of the high cost of funds basically. So these are some of the factors which have contributed to some of the pressures on the banking system.
That is very true. Let me go across to Ananda right now from this question, because we've seen a diesel price hike, so we've possibly averted a ratings downgrade sort of a probability right now. We just saw CRISIL very recently revise its estimates when it comes to loan restructuring. Increasing loan restructuring is what they are expecting. Most of the bankers are seeing stress in the large corporate segment, especially. From a ratings agency perspective, Ananda, what is your sense? Do you think the Indian banking system will be able to sustain this kind of a stress in asset quality, especially that emerges from the large corporate segment, in the very near term? In fact, not only that, it's not even very far off, not 1 or 2 years next. It's in fact very, very near term. We can expect something like that.
I think there are a couple of points here. The first is that you're right. The slowdown and the pressures that we are seeing on the banking sector is probably the deepest that we have seen in the last 10 years. But there's a separate angle to that. One of the first point is that as working capital bankers, you would expect that a lot of the pressures should be cyclical. And that's the traditional view. What has diverged in the last 5 years, a couple of points. One is the single name concentrations have been building up. And the sector concentration in infrastructure is now probably the highest that we have ever seen. Now, there are the cyclical angle, the cyclical pressures can probably be discounted, and we can probably take a view that they'll probably reverse at some point in time. But it's actually those impact that's coming from the single names that probably, in our view at India Ratings, probably factors in about a third of the pressure that Indian banks face. And that is what the concern is, because we are not sure exactly where this is going to end. There are policy issues here. There could be pressures on the banks to further increase their exposure to infrastructure, given that they're really the only intermediary that makes sense in the system that can fund growth coming from investments. And I think these are pressures that we've got to watch out for. At this point, in India Ratings, our view is that the system is very finely balanced. The banking system obviously has adequate pressures and capital to be able to withstand this, which is why we see a stable rating on a large chunk of the banks that we rate. But were the sector and the single name concentrations to increase, I think we could get into problems that we haven't seen for quite some time.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. faster response time, and Sudoku. NDTV's new iPad app. Download now.